Swayam Prabha. Digital India. Educated India.
योगः कर्मसु कौशलम्.
Friends, Namaskar. My name is Dr. S.C. Sardar, retired professor, SD School of Commerce, Gujarat University, Ahmedabad. Friends, we are discussing about preparation of final accounts. We will continue with the preparation of final account part 5. Friends, in the previous part, we had discussion on adjustment pertaining to closing stock, outstanding expenses, prepaid or unexpired expenses, accrued or outstanding income, income received in advance or unearned income, depreciation. All adjustment we have studied with their adjustment entry, their impact on different components of the final accounts and their disclosure in final accounts. In this part 5, we will study one illustration including adjustment which we have studied so far, and subsequently we will discuss other remaining adjustment with the relevant examples and illustrations. Illustration number 4 with GST. Following trial balance at 31st March 2025 is drawn from the books of Dushyant. See friends, here debit side we are given information, credit side we are given information. Cash in hand 80,000 rupees, it would appear asset side. Cash at bank would appear at asset side. Wages 2 lakh rupees is given to you friends. The whatever figures are shown in red ring, that is including effect of adjustment. So, wages of rupees 2 lakh would appear in our trading account debit side. Sales is 35 lakh rupees would appear in trading account credit side. Machinery having adjustment, that is 21 lakh 20,000 would appear in our balance sheet asset side. Bills receivable 4 lakh asset side balance sheet. Opening stock 8 lakh 40,000 rupees debit side of our trading account. Then we are having creditors of rupees 4 lakh liability side of balance sheet. Purchases would appear 38 lakh rupees debit side of trading account. Sales return would appear at the credit side of trading account, will be deducted from the sales 60,000 rupees. Salaries having adjustment 3 lakh 82,000. Salary is the component of profit and loss account debit side. Debtors are item of balance sheet asset side. Insurance is our revenue expense would appear debit side of profit and loss account. Bad debts is our loss 60,000 rupees would appear at debit side of P&L account. Freight on purchases 48,000, it is the expense of purchase, that is why it would appear in our trading account debit side. Capital we are having 32 lakhs rupees would appear liability side in balance sheet. Commission income is given to us of rupees 1 lakh, that is 1 lakh having one effect of adjustment that we will see in the subsequent course. Input GST which we have paid is 5,000, input as GST which we have paid 5,000 rupees, and total 92 lakh of trial balance. Considering the following adjustment, prepare trading and profit and loss account for the year ended 31st March 2025 and balance sheet as at that date. Also pass journal entries for the adjustment. Friends, we are asked to prepare final accounts as well as to pass the closing entry, journal entry pertaining to adjustment. We are having first adjustment, that is about closing stock 9 lakh rupees is given to us. Number 2 is outstanding salary of rupees 32,000 and outstanding wages of 20,000. Salaries and wages are not subject to levy of GST. Be careful in this case. Then prepaid insurance of rupees 9,000 and accrued commission of rupees 12,000. Prepaid insurance and accrued commission are subject to levy of CGST and SGST at the rate of 6%. Is very beautiful point is given to you. Be careful for this to understand this. Then charge depreciation on machinery at the rate of 10%. Now, let us see the solution of this. As we have explained in the previous units that as and when we are going to solve the final accounts related problem, at that time we should always commence with the adjustment. Then after we should take the effect of adjustment in final accounts, deal with the debit side of trial balance, and finally with the credit side of trial balance. Then you close a trading account and transfer it to profit and loss account, close P&L account and transfer to the balance sheet in capital account, and finally you close balance sheet. Now let us have a look on our adjustment. The first adjustment is given to us about closing stock, and closing stock is rupees 9 lakh. Generally closing stock is always available from the stock register, and that is why it is not appearing in our trial balance. So we have to pass the closing entry for closing stock. So closing stock will be debited by rupees 9 lakh and will be transferred to trading account. Then second adjustment we are having pertaining to wages. We are having wages outstanding 20,000 rupees. It is our liability, but it is the expense of current year. So we have to debit it to wages account 20,000, and as a liability side we have to show outstanding wages rupees 20,000. Then after friends, like wages, salary is also outstanding, but salary is the expense of profit and loss account, will be added in our salary. It is outstanding. So salary account debited by 32,000 rupees and outstanding salary account will be credited by 32,000 rupees, and this 32,000 is our liability and to be shown at the liability side of balance sheet. Then another point is about prepaid insurance premium. We have paid prepaid insurance of rupees 9,000. So it is our advance payment. It is not our expense of current year. So that to that extent we have to reduce our premium expense account. So prepaid insurance account is debited by rupees 9,000 and to insurance premium account credited by 9,000 rupees. Friends, be careful over here. GST paid, that is input GST and input SGST accounts will not be credited because GST is payable when premium is paid. Now friends, here another point is given to us, that is about our income accrued but we have not received. So here accrued commission account debited by 13,440 including effect of GST, and commission account will be credited by 12,000 rupees. Our net income of commission is 12,000, but we have to record the effect of GST because on it GST is levied. So commission account is credited by 12,000 to output CGST account 720 and to output SGST account will be credited by 720. Note is also given to you, commission earned but not received is brought into the books, therefore CGST and SGST also will be provided. Then friends, about machinery depreciation. Depreciation of machinery is of rupees 2,12,000. That is why depreciation account will be debited and machinery account is credited by 2,12,000 rupees. Now friends, we will see our trading account. We had enough discussion on trial balance. We have already discussed the effect of adjustment. Now let us have a look on our trading account. Let us see the items of debit side of trading account. The first item is opening stock 8,40,000. Next item is purchase is 38 lakhs. Freight on purchase is 48,000. Yes, wages which you have paid is of rupees 2 lakh and outstanding of current year is 20,000. So total expense of the current year on accrual basis is 2,20,000. We will see now the items of credit side. The first item is our sales rupees 55 lakhs. From that sales return is deducted because we have returned back the 60,000 rupees. So our net sale is of rupees 54,40,000. And at the same time we are having closing stock of 9 lakh rupees. So total of both the side, that is 63,40,000, and difference is appeared at the credit side of rupees 14,32,000. I mean that is in our trading account. This gross profit now we will transfer to our profit and loss account. We will see the items of our profit and loss account. The first we will transfer this gross profit to our profit and loss account 14,32,000, and then after we are having commission of current year 1 lakh rupees plus the 12,000 is commission outstanding of current year. So total income of commission is of current year is 1,12,000. Now let us have a look the debit side of profit and loss account. We are given salary of rupees 3,82,000, but we are having outstanding salary of 32,000. So total expense of salary comes to 4,14,000. Like that Let us have a look on taxes and insurance. 2,20,000 is given to us, but in that rupees 9,000 is a prepaid insurance, that is a expense of next year. It is an advance payment of expense to be deducted from current year. So, our taxes and insurance expense net will be 2,11,000. We are having bad debts of rupees 60,000 and depreciation on machinery, that is at the rate of 10% on 1,20,000, that comes to 2,12,000. Now, friends, here what happened? The total of credit side is greater than the total of debit side. Obviously, the difference would appear at debit side, and that is our net profit 6,47,000 rupees. And this amount of 6,47,000 is the profit of the owner to be added in the capital of the owner. Now, let us see balance sheet in order of liquidity. We have prepared the balance sheet in two ways, in the order of liquidity as well as in order of permanency. So, first here current liabilities are given, the liability side, sundry creditors 4 lakh, outstanding salary 32,000 and outstanding wages of rupees 20,000. Then continuously we will see the item, that is our opening balance of capital 32 lakh. We have added net profit of 6,47,000, that comes to 38,47,000 rupees. So, it is a balance sheet in the order of liquidity. We have seen the liability side. Now, let us see our asset side. First, we will see our current assets, cash in hand, that is 80,000, cash at bank 1,20,000, bills receivable 4 lakh rupees, debtors 8,60,000 rupees. Then, friends, it is important to note over here is input GST is given to us 5,000 rupees. From that, output CGST 720 is to be deducted. So, that comes to 4,280. In the same manner, input SGST is given to us 5,000 rupees. From that, we have to deduct output SGST 720. So, the final amount is 4,280 rupees. Prepaid insurance 9,000. Accrued commission 13,440, closing stock 9 lakh, and then finally our fixed assets, machinery 21,20,000 minus depreciation 2,12,000, that comes to 19,08,000, and the total of the balance sheet of both the sides 42,99,000. So, this was the balance sheet in order of liquidity. Now, we will see balance sheet in the order of permanency. First, we will see our capital side. In the capital side, the first we will have our capital, that is opening balance is 32 lakh plus net profit 6,47,000. So, closing capital of the owner after adding profit is 38,47,000. Then we will see current liabilities, sundry creditors of 4 lakh, outstanding salary 32,000, outstanding wages 20,000 rupees. Now, we will switch over to the asset side. Fixed assets, machinery is given to us 21,20,000, depreciation to be deducted, and we have deducted over here, that comes to 19,08,000 rupees. And now, we will see our current assets, closing stock 9 lakh, bills receivable 4 lakh, debtors 8,60,000, net input CGST 4,280, net input SGST 4,280, prepaid insurance 9,000, accrued commission 13,440, cash in hand 80,000, cash at bank 1,20,000, total of the balance sheet would remain same 42,99,000. Now, in the continuation of adjustment, we will see adjustment number 7, and that is about bad debts. Friend, bad debts is also one kind of loss to the organization. When credit sales is made and full amount or partial amount is not received from the debtors, the amount not received is known as bad debts. It is a loss to the business. There can be 3 situations for bad debts. Number 1 is when bad debts are given in the trial balance. In this case, bad debts is already deducted from debtors. Only closing entry is needed. For example, rupees 6,000 for bad debts and rupees 60,000 for debtors are given debit side of trial balance. Only closing entry is to be passed for bad debts, and that is we have to transfer it to profit and loss account 6,000 rupees, and bad debt account will be closed. So, it will be credited by 6,000 rupees. It means the bad debts account is closed and transferred it to profit and loss account. Now friends, disclosure in the final accounts, bad debts is our loss, it is our expense to be shown at the debit side of profit and loss account. And 6,000 rupees straightway given in the trial balance, so no second effect is to be given in the balance sheet. And in balance sheet, the net amount of debtors will be shown 60,000 rupees, no question of deduction of bad debts because bad debt is already disclosed in the trial balance. Number 2, when bad debts are given in adjustment. This is a very important point, friends, try to understand it. In trial balance, debit side debtors are of rupees 60,000 and in adjustment bad debt is estimated 12%. It means that we have not deducted bad debts at all before preparation of trial balance. It means this bad debt is not appeared in the trial balance and we have to pass the entry for this bad debt. So, here the total amount is of rupees 60,000, 12% on that comes to 7,200 rupees. So, bad debt account is our loss to be debited by 7,200 rupees and to that extent we have to reduce the value of our debtors 7,200 rupees. It means rupees 7,200 will be deducted from debtors because bad debt is not recorded. And now, bad debt account is our loss account or expense account. We have to close this and it is to be transferred to profit and loss account. So, P&L account debited by 7,200 and bad debt account is credited by 7,200. Ultimately, the final effect you see in the first entry debited bad debt 7,200, in the second case credited, so bad debt account is closed and final effects goes to debtors account, that 7,200 debtors would reduce and profit would reduce by 7,200 rupees. Now, disclosure in final accounts. In profit and loss account, we have to disclose bad debt 6,000 rupees as a loss and the second effect to be shown, effect of debtors in our balance sheet, debtors we are having of 60,000 and from that 6,000 rupees will be deducted. So, 54,000 rupees to be shown. Third point is when bad debts are given in trial balance and in adjustment. This is very important point. See, this is a mixture of first and second point. In trial balance debit side, bad debts is rupees 6,000 and debtors of rupees 60,000 are recorded and in adjustment bad debt is estimated to be 12%. In this situation, adjustment entry and closing entry both are to be passed for bad debts. Any balance given in trial balance is recorded balance and we have bad debts rupees 6,000 is recorded and debtors of 60,000 are recorded. But bad debt is estimated to be 12% of rupees 60,000, that comes to 7,200. We have recorded 6,000, thus remaining 1,000 is to be provided, means 7,200 minus 6,000 rupees. Let us see the adjustment entry. Our requirement of bad debt is 7,200. We are already having 6,000 rupees. So, only 1,200 is to be provided. So, bad debts account debited by 1,200 to debtors account 1,200 rupees. So, to that extent our debtors account will be reduced. Then we will see the closing entry. In closing entry, profit and loss account will be debited by 7,200 and bad debts account will be closed by 7,200 because we are having old bad debts of 6,000 plus new bad debts of 1,200 rupees. So, total bad debt will be of 7,200 rupees. Then we will see disclosure in our final accounts. In profit and loss account, as I told you friends, the whatever amount is given in the trial balance straightway to be shown in the profit and loss account, since it is our loss, so to be shown at the debit side. But our total requirement of bad debt is 7,200. We are having bad debts of 6,000. So, only 1,200 is to be provided, but total will be of rupees 7,200 rupees. And from debtors, 7,200 will not be deducted. Only 1,200 will be deducted because 6,000 is already appeared in the trial balance. Another point is about bad debts recovered. This is also important point. Friends, be careful. It is our one kind of income. It is possible that bad debts written off during previous year may be paid by the debtors in current year. It is the loss written off previous year and now it becomes income in current year. In this case, the same amount will be credited in profit and loss account. If it is recorded in trial balance, only closing entry is to be passed. If it is recorded in adjustment, then adjustment entry and closing entries are to be passed. So, here in the first case, we are showing that to bad debts account recovered, the whatever amount we have recovered, that we have to credit, but the amount we have received, and that is why bank account will be debited and to bad debts recovered account will be credited. This is our income. So, closing entry we will pass for that. So, bad debts recovered account is debited to profit and loss account. Now, friends, in pertaining to the debtors, another point which we have to see is about provision for doubtful debts, means bad debts reserve, it is known as BDR. According to conservatism concept, probable loss is taken into consideration, but not probable gain. To be on safer side and to follow prudence or conservatism concept, some amount of debtor is to be kept as a reserve with the expectation of loss of bad debts. This kept amount is known as provision for doubtful debts or bad debts reserve. Friends, kindly note that bad debts will be recorded first and in second stage BDR is recorded. Another thing is to be kept, remember that bad debts and debtors are debit balances and BDR is credit balance. There can be different situations on BDR. Let us have a first, when BDR is given in trial balance, in this situation BDR is shown at liability side, or you can deduct it from debtors from asset side of the balance sheet. When BDR is not given in trial balance, in this case only adjustment entry is passed. For example, in trial balance debtors are rupees 75,000 and in adjustment BDR is to be created by 5%. So, 5% of 75,000, that comes through 3,750. So, in this case profit and loss account will be debited by 3,750 and BDR account we have created, so that is 3,750 rupees. And disclosure can be shown in two ways here, that we will see in the profit and loss account we have reduced profit by 3,750. So, debit side to BDR 3,750, and in our balance sheet we have two alternatives, either you can deduct it from debtors. Here see 75,000 debtors are given and BDR we have deducted 3,750. So, net effect comes to 72,250. In second case, what you can do, you can show the debtors amount, total amount at the asset side 75,000 and BDR you can show at the liability side, the effect would remain same of the net amount. When BDR is given in trial balance and in adjustment as well, this is also important point, friends. Let us understand the situation with example. In trial balance, debtors of rupees 80,000, bad debts of rupees 5,000, BDR 6,000 are appeared. These are three items which are already appeared in the trial balance, but in adjustment new bad debts of 5% is to be provided, BDR is to be maintained at 10%. Friend, kindly concentrate on this point. Balances appeared in the trial balance are old balances and in adjustments are new balances. In brief, balances of trial balances are old balances and balances of adjustments are new balances. Entries to be passed. Number 1, debtors and BDR accounts of balance sheet, thus no closing entries are needed for these accounts. For bad debts of trial balance, closing entry is to be passed for rupees 5,000. For new bad debts, adjustment will be passed for rupees 4,000, that is 5% on 80,000. Then maintaining BDR 10% of debtors 7,600. How it is calculated, friend? Have a look over here. As I told you, from total amount of debtors, first we will deduct our bad debts, then after we will deduct our, or we will calculate our BDR. So, 80,000 less new bad debts 4,000, that comes to 76,000, and now 10% of 76,000 is 7,600, that is our total requirement of BDR. Now, we will have a look on entries. Here we are having bad debts in our trial balance 5,000. So, profit and loss account will be debited by 5,000 to bad debts account 5,000 rupees, a closing entry for bad debts of trial balance. Then bad debts account new which we have created, friends, it is a new adjustment. So, bad debts account will be debited by 4,000 rupees and to debtors account 4,000 rupees. Then we have to create BDR. Profit and loss account debited by 7,600 to BDR account 7,600 rupees. Now, finally, friends, the whatever new bad debts we have created, that we have to transfer to profit and loss account. So, P&L account debited by 4,000 to bad debts account 4,000 rupees. Now, we will see disclosure in our final accounts. Let us have a look to our profit and loss account. Friends, be careful over here. Here, old bad debts we are having 5,000. When I am saying old, means the items of trial balance, and new adjustment we are given, that is 4,000. So, total bad debts of the year is 9,000 rupees. Friends, BDR we are required to have 7,200 and BDR we are already having of 6,000 rupees. So, only 1,200 we have to create during the current year, and that is why it is disclosed at the debit side of profit and loss account. Friends, kindly note that bad debts of trial balance and adjustment will be recorded debit side of profit and loss account, and amount of bad debts of adjustment new will be deducted from balances of debtors in the balance sheet. After having deduction of bad debts of adjustment, BDR will be calculated. When BDR is given in trial balance as well as in adjustment, in such a case, record old BDR debit side of profit and loss account, and from that deduct new BDR, and difference will be provision from profit of current year, and deduct the amount of new BDR from debtors in the balance sheet. If be careful, if difference of old BDR and new BDR is negative, record difference at the credit side of profit and loss account. Now, we will have a look in our final accounts. Debtors we are having 80,000. The whatever 4,000 we have recorded over here is our new bad debts, means of adjustment, and then after we have deducted our BDR, that is 7,600 rupees, total requirement of current year. So, 68,400 will be the net amount of our debtors. Now, friends, we will have a look on the summary of this fact. So far, we have acquired the information about on comprehensive illustration on preparation of final accounts with effect of studied adjustments. Some other adjustment with example like bad debts, bad debt recovered and BDR and their different situation with the accounting treatment. We will meet soon with some remaining adjustment and preparation of final accounts. Thank you for joining us. Namaskar.